everyone. Just as a reminder to everyone listening on Twitter Spaces, disclosure obviously is none of this is to be taken as investment advice. We're just discussing our thoughts and ideas about stocks and the market in general. So, yeah, Matt, crazy times. Tesla's down $100 last I checked.
I
$115
think
now.
115 now. Yeah.
Wow. I mean, this is a bloodbath the last couple of days, after a nice run up. What do you, I mean, we'll get more into Tesla, I think, shortly, but, everyone wants to hear us talk about Tesla, obviously. But also I think there's a lot of big news on Lemonade and Roblox, two other stocks we talk about and our fund has sizable positions in. Both had big news yesterday. Should we kick it off with Lemonade a bit, do you think, or?
Yeah. They're also down quite a bit today, but they had
Yes.
some pretty interesting news that I've been diving into a little bit. They essentially disclosed that they are going to be acquiring a company called MetroMile, which is a really small kind of insurance provider that focuses on kind of advanced telematics and kind of pricing car insurance with AI around that platform. So really kind of going with what Lemonade's overall business strategy is to price things more efficiently. Kind of use AI and kind of the current generation of technology, which is for the most part ignored by kind of the legacy insurers out there, and using that to price things more accurately. So the market clearly did not like this news. I think MetroMile has had some issues with their financials, not being as robust as people were maybe hoping for. I know Chamath Palihapitiya was one of the investors about a year ago that was interested in this company.
Yes.
So yeah, it's the market clearly doesn't like it. I think it makes loads of sense. I mean, we can get into some of the more details in a little bit here, but I think it's a great strategic acquisition. Yeah, the financials aren't great right now, but that's kind of consistent with Lemonade's overall strategy of trying to kind of get as much market share as possible while they're in this growth phase, and kind of figure out optimization and getting cash flow positive down the road once they've got scale. But what was your thought?
Yeah, I have mixed feelings about the MetroMile acquisition. I mean, I think there's more pros than cons. I mean, the cons are generally I don't like mergers and acquisitions unless there's some like very clear IP being gained from it. And to me, that's a little questionable. I mean, they sell it as if there's some serious, IP and data they're gaining, but it's not stuff that I don't think Lemonade couldn't figure out how to do themselves, given their kind of tech foundation. So and the other con sort of is it accelerates their risk of running out of cash sooner. I think last I looked, I think on their earnings they mentioned they have just over $1 billion in cash. So they're going to burn more, not only some cash. They're diluting their stock with this merger.
Yeah, it's a stock acquisition. Yep, or merger.
Yeah. And they're taking on a little extra cash, I think, that MetroMile had on their books, but they're going to be diluting more. I mean, they're going to be burning more cash per quarter going forward with, what is it, like 500 plus employees MetroMile has and whatever infrastructure they have to maintain. So, they'll be burning more cash per quarter, it increases the likelihood of Lemonade needing to go to the capital markets again sooner for more cash. It doesn't mean they ever will have to do that, but at some point that likelihood has increased. Those are the cons, and I feel like that's why the stock's sort of reacting the way it has. The pros, I feel like it seems to be very favorable terms based on the recent valuation. Like if you look at MetroMile's stock performance, and I think it was a SPAC or something, but it went up to like $20 a share at one point. Now it's at like they're buying it at they're acquiring it at like $3 or $4 a share. So it's like near the 52-week lows. I mean, if there's a timing, if you're trying to buy low, sell high, this is the epitome of buying low on an acquisition. So that is really a good pro to me. They're not buying when it was at $20 a share, and the valuation, they would have had to dilute a lot more stock to merge with it at that time. Also, instead of just accelerating, that other pro is it really accelerates the ability to roll out car insurance. Sure, Lemonade could have done most of this on their own, but it'd be a much slower, harder path. MetroMile's kind of already in front of them and licensing with states, and some of the data they've collected. Lemonade seems to think they can apply quicker to their algorithms and risk assessment and such. So it really accelerates Lemonade's ability to roll out car insurance, which to me and you, I think, is the biggest business we see in Lemonade is car insurance. So that's great.
Yeah, I think that is potentially an underrated point that the market may be missing is
Yes.
just how much this accelerates what Lemonade's able to do. I mean, they're essentially kind of acquiring their way into being able to offer car insurance in 49 states, which I mean, we know from Tesla's experience how long that process can be to kind of roll out all those state registrations. So that's a huge way to just kind of enable a faster rollout than they otherwise could possibly do. And then the other piece of it, I think, is the fact that MetroMile already has, I think it was 2 billion miles driven, so they've got a really good data set. So we like to talk about Lemonade's kind of advantages with AI and kind of being able to price things. But you obviously need a robust data set in order to do that. And I'm sure they would have kind of built that out organically over time. But this just really accelerates the kind of feedback loop that they can have in pricing this insurance product accurately. And I think there's a lot of room for that to kind of grow. One of the things, if you looked at their press release on it, they had a short little kind of deck they put out there with some of the main takeaways. But they were essentially talking about the fact that something we all kind of know intuitively, that the legacy insurers kind of price via proxies. They'll kind of price your insurance based on your zip code and how expensive your car is and like marital status and like whether you get good grades in college. There's all these strange things that are kind of proxies for risk in a roundabout way, but they're really just kind of slicing general portions of the population. Whereas what MetroMile is able to do and what Lemonade really wants to do is to kind of use a continuous stream of real-time data to accurately price individual drivers and kind of update that pricing, on a regular basis based on the risk profile of those drivers. So I think that's a really underrated disruption to the entire market. I mean, one of the stats they had in this deck was that 95% of insurance policies today don't use any telematics at all. So I mean,
Yeah.
if you have better data, you can certainly price better.
Yeah. And the ones that do, they do it for like 2 weeks just to like assess an initial risk assessment. That's what, I was listening to the earnings call, and I think Daniel Shriver was talking about it, how, ignorance is bliss amongst the legacy insurance providers. Even though they have the technology to do the telematics, some of them, they only do it very temporarily just to assess initial risk. And then they stop using it because if they used it the entire time, it would totally disrupt their existing legacy business model in different ways that they're not ready to have disrupted, So there just seems to be, it seems to be ripe for disruption. Lemonade's, I think, the one to do it. The other pros I thought is, accelerates their need to hire more developers and software engineers and such, so it accelerates their hiring ability. So basically they took on the hundreds of MetroMile employees, instead of having to hire one by one with HR and figure out who's good and who's not, and hire and fire, they're taking on a lump of several hundred employees. Most of them have been proven enough to stay on board with MetroMile. So it's a much lower HR cost in a way to take on a ton of new skills and talent in that field that they need it quick. So that's a nice pro. And then the last kind of pro I thought of it was there seems to be a higher potential partnership opportunity with an existing auto manufacturer from this. I kind of listened to some of the Q&A, or most of the Q&A, and one of the answers Daniel Shriver gave when they asked about like a partnership with Tesla or someone like that was that he's not going to talk about upcoming partnerships. He said something like that, and that MetroMile has talked about potential partnerships in the past. I don't think he was implying Tesla necessarily, but I think he was implying that there is partnership potential, coming up, and like an announcement with like Ford, for example, saying like,
But they have an existing partnership with Ford, so they're actually getting a
oh, they
lot of
do.
data from Ford right now, and that's one of the
MetroMile,
reasons
right?
they MetroMile, yep.
Yeah.
So and presumably they're looking to expand that out into
Yeah.
other OEMs, but yeah, I mean it's this whole trend of the connected car. Of course that's great for autonomy and for the user experience in general, but there's broad implications to the insurance industry that the kind of lumbering giants in that
Yeah.
space are not addressing.
Yeah. And I think what
So
we have to do, we have to make sure everyone understands. We have to frame all of this lemonade discussion. Make sure everyone, I see too many people like Lemonade is a 4 billion market cap company, $4 billion. It's like tiny, right? So when we're
mhm,
talking about Lemonade, we talk about it with like some sense of conviction, although it's like, minuscule to the size of Tesla. When we start talking about Tesla later, Tesla's a $1 trillion plus company, that's, hundreds of times bigger than Lemonade, right? So obviously Tesla is going to be magnanimously more successful in everything it does. It's assumed in its market cap, right? So when we're talking about Lemonade, they just need to eke out some sense of success in the car insurance, I think, to be worth well north of 4 billion market cap. They have these other insurances, homeowners and pet insurance, that are all growing steadily. And another thing that I think the stock is underappreciates, or the market underappreciates with Lemonade, with the earnings, is they note their total customers. It's like 1.4 million now, I think, something around there. But they also note that like
mhm.
25% of their new customers, or 25% of the new policies, are people that are kind of doubling down with existing policies already with Lemonade. So they're like
Mhm.
cross-selling multiple policies. But those new policies are not counted as new customers. Like that, like I
Mhm.
think Wall Street looks at the customers like users in Roblox, which we'll talk about in a second, or whatever, but some of these customers are like should be double counted, but they're not double counted in the Lemonade stats, if you think about it that way, because
Yeah.
Lemonade's offering multiple insurance convections together. Does that make sense?
Yeah, one of the analysts actually seemed to get really tripped up on this. I mean, he asked the same question essentially 3 times. He's like, "So, it looks like you're just charging your customers more money, like, for the same policies last year. Like, can you explain that?" And, like, they explained it, like, 3 times, and he just didn't get it. And like,
Oh,
eventually, like, on the 3rd attempt, they finally kind of got it, and he's like, "Oh, okay, so you're cross-selling policies."
yeah, yeah,
And so like the spend per user is going up, but it's not just because you're charging them. It's like, yeah, I don't
yeah,
like. So I think there's
yeah,
a huge amount of kind of misunderstanding in the
yes,
market's reaction today to this news. I
yeah,
kind of love. I mean, we haven't added more of it to the fund, but I think we'll probably talk about that
yeah.
some other time here shortly. But
Yeah.
I mean
I love that the
the
price is going down right now. I do love the price is going down. Like, to me, long term, I'm very strong. I mean, it's very risky, Lemonade, right? I mean, it
Mhm,
could run out of cash. They're highly shorted, like I think as of October 15th, it says over 35% of its shares have been shorted. That's the market beat headline I saw when I Googled it earlier today, just to get the stat. So it's a very highly shorted stock on Interactive Brokers platform. For example, if you own shares, it has a utilization rate of 78%. What that means is if you own Lemonade shares and you're part of Interactive Brokers automated stock lending program, 78% of your shares are being lent out for revenue.
mhm.
The borrow rate is small. It's like around 1%. It's not big, but that's disconnected from the amount of shares being lent out a lot of times in the stock lending market, which is not very transparent always. So it's a very highly shorted stock. And so that's bullish to me too, medium long term, if they can ride this out and to become
Yeah.
profitable down the road, or yeah,
Yeah, yeah, but I think one of the things about this kind of current setup today is oh the market kind of thinks MetroMile is a bad acquisition target because look at how bad its financials are, is
Mhm.
kind of the prevailing wisdom. But if you if you look at the advantages that we've spoken about today, I mean the fact that they can cross sell products, so they're acquiring an existing customer base in MetroMile, and who then they'll be able to sell pet or renters insurance policies or homeowners insurance policies too. And they've got kind of this existing platform that they'll be able to leverage across all of their existing products. One of the items that I think kind of got swept under the rug when I was listening to the earnings call, is their loss ratio degraded this quarter But what they actually said is that their loss ratio improved in every single category. However, the mix shift changed quarter to quarter into the higher loss products. So it looked like a decline, but what you've actually seen is that their AI is working, their pricing strategy is working, and they're getting that loss ratio improvement on a per category basis. But they're growing so much in kind of the newer segments that it looks like it's declining. So I do think folks are kind of, Wall Street anyways, is misinterpreting this a little bit. And then one other item that with the very end of the call that really stuck out to me, especially if you are just kind of trying to debunk this thesis that MetroMile and maybe as a proxy Lemonade are not pricing well, or their financials are a disaster. But they were saying that people getting quotes on MetroMile, so just at the kind of pricing stage, 45% of all people just getting quotes could see savings of 30% or more on their existing policies. And the reason for that is what we were talking about at the very beginning, because you have around half, or I think it's more like 2/3 of drivers are subsidizing the riskiest 1/3. So you're gonna see, I think, in the coming years, a huge exodus of the safer drivers to these cheaper options, to Lemonade. And then the
Geico's gonna get all
legacy,
the hazard.
they're going to be the bag holders. It's going to be this death spiral where they're going to have to keep raising rates, and that's going to make the safer drivers move to these platforms that use telematics. And right now, really, the only one with scale is going to be Lemonade. So I'm super bullish on it. The more I've been digging into it.
I mean, I think it's like a 2 to 5 year play out. How soon the market realizes and appreciates it, I don't know. But it's going to happen, I think. And as long as Lemonade isn't going to be, run out of cash, and the shorts, suppress their price so far where it makes it really hard to raise capital, I see high likelihood of Lemonade becoming a much bigger company. One of the biggest misnomers I see people asking us about Lemonade is, what about Tesla competition? How's Lemonade going to compete with Tesla? And that's a silly question in my mind. I mean, Tesla is going to rule all Tesla owners' insurance. Okay, yeah, that's fine. But at best, that's probably 20 to 25% of the market in 2030. There's still 50 to 75% of the market for everyone else that's not Tesla available for Lemonade. And even if Lemonade just captures a tiny portion of that, at a 4 billion market cap company, that's going to grow to be much bigger. I mean, people talk about Tesla's insurance and valuing Tesla's insurance at 10 or 20 or 50 or 100 billion. I've seen some people say. So if you can value Tesla's insurance component at, multiples of what Lemonade is now, I mean, you have to think about the difference in market caps. I think people think Tesla, Lemonade, and they don't frame in their mind the difference in the market caps, when they think about different stocks. You have to always frame whatever your thought process is around the stock, somehow keep in your mind, juggle in your mind the actual market cap of that stock while you're talking about it, so that you can frame everything you say around that. Does that make sense?
Yeah, absolutely. Absolutely, it does. So speaking of market cap, we should probably move on to Roblox.
Real quick, just so everyone who's probably joined us late, I put an outline in the tweet as well. The outline is basically Matt and I are just talking for the first time ourselves, kind of open sourcing a discussion on Lemonade, Roblox, the earnings. We're going to start talking about. I'm excited to talk to Matt for the first time about Roblox since their earnings. And then we'll talk a lot about Tesla. Everyone's waiting for us to talk about Tesla. I'm sure it's down huge. Tough day for us Tesla investors. We're heavily in Tesla, losing a fortune today as well, obviously, on it. But Roblox, we're going to talk about now. Super exciting. Matt, what did you think about Roblox?
Yeah, I mean, it was a great earnings print, essentially. I mean, I think the biggest takeaways were just kind of the growth in users. And, I think there was some concern heading into the quarter that they had this kind of existing user base of younger users, and coming out of the COVID kind of lockdown, that the revenue per user was going to drop, and instead you saw kind of a huge increase. I think it was 102% year over year increase, and keep in mind that comparable period last year was kind of in the middle of the COVID shutdown. So to grow 100% on that comparable quarter is remarkable. But they also grew sequentially. The user base growth was really strong. The bookings per daily active user were relatively strong. And so the market clearly loved it, up 33%. What was your kind of takeaway looking at all the
Yeah.
numbers and listening to the call?
I mean, I think we're sort of vindicated on our view, like our our medium term kind of thesis on Roblox has been that the market's been discounting Roblox success to be like a pure COVID play too much, you know? And I
Yeah.
think part of the reaction today is kind of the vindication that Roblox is successful beyond being a stay at home COVID play. You know, I think the numbers they released yesterday shows that. It's like proof, like, hey, Roblox is not like a Peloton where it's just a stay-at-home COVID play. You know, Roblox is here to stay.
Hmm.
It's growing fast. So I think that awakening is sort of happening, right? You know, like
Hmm.
the biggest stat I saw was there's two stats. There's a hidden gem stat I'll talk about in a minute, but the biggest mainline headline stat I saw in listening to their stuff and reading analysis is that they had over 11 billion engagement hours versus analyst estimate of
Yeah.
about 10.5 billion engagement hours. So that's a pretty substantial, you know, beat on engagement hours. You know, like that's what you want. You want people engaged in Roblox. So I think that was nice. Um, I think the bookings per user is only slightly down versus probably what people expected it to be more down. I don't know. People who listen to our Matt Canterbaum. I can't remember his last name. I think a Canterbaum.
Caterman, I think.
Matt Canterman. We had a chat with him a couple weeks ago on our channel. Check it out if you haven't seen it. But he's a Bloomberg intelligence analyst on Roblox, the Metaverse, gaming stocks, and we went into detail on Roblox with him. And we asked him about the bookings per user. He talked about the bookings per user going down each quarter, it seems like on average, but that's because they're expanding their demographics dramatically to lower income geographies. So when you expand your addressable market per user to like, you know, third world countries more instead of just the US and Canada, you know, in Europe, you have like a lot of South America, different parts of APAC. Then the bookings per user on average is going to go down as the number of users are growing astronomically. So the bookings per user went down slightly, but you know, I'm happy with that based on their expansion. So I thought that was actually a pretty good, you know, thing.
Yeah, and I think you're right. I mean that engagement hours is like probably the most important single metric to Roblox going forward. I mean, when we were talking with Matthew about kind of the market and the bigger picture, metaverse play that this is I think a lot of the value for the company is based on. Matthew was talking a lot about kind of disrupting the current version of using the web, like basically going to Facebook and you see kind of banner ads. A lot of
Yeah.
those engagement hours are going to switch into metaverse platforms, Roblox probably being one of the most successful ones. And so if you can see those if that's where the eyeballs are going to be in the future, and if that's growing at an astonishing rate, kind of like it was in Q3 here, that bodes really well for kind of the ability to continue to monetize going forward, and for advertisers wanting to do more unique kind of setups on that platform, which you're starting to see a little bit already. They talked about the Vans platform that was on there this quarter.
21
Chipotle
Pilots
had
concert. Yeah.
so
And
there's
they even had like a
more of these
Netflix. They had a
experiences.
Netflix show debut on Roblox. I can't remember the name. Like, but they also had Squid Games, like a game for Squid
Hmm.
Games, like immediately come on Roblox. You know, like these are just demonstrations of where Roblox is evolving. You know, it's going to become like so mainstream for every major every major firm out there that has a marketing department that's trying to be part of the 2020s is going to have some marketing presence within Roblox. I think they're going to start realizing. So you'll see lots of these partnerships coming up soon.
Yeah,
Yeah.
I think you're right. And that's one of the things they were talking about on the call is, they're doing a little bit of handholding with companies right now to try to kind of set up their experiences and tell them how to use the platform. But really going
Yeah.
forward, they want to be a little bit more hands off, which is going to be a great feature. I do think in the future you're going to see marketing departments kind of transition away from what they are today to a little bit more of a technical skill set, and kind of being able to create some of these really unique opportunities and universes or metaverse experiences. So
Yeah.
in my mind, we're really in the early days of this, and Roblox is kind of
Yes.
at the forefront. So I'm really excited to see where this goes.
Yeah. I mean, Roblox, yeah, like you said today, the news cycle is talking about Roblox a lot. It's becoming more widely accepted by the market as a pure metaverse play, and it may not be exactly a pure metaverse. No one really knows what the metaverse is going to be yet. Is it Web 3.0? Is it just, the natural evolution of the internet? But it's here to stay, and it's a part of the future. I think people are starting to understand. The foundation of Roblox's success, which we've long talked about, is that flywheel cycle where the developers are like the foundation. Without content, there's no users. Without users, there's no developers that want to come use it. So it's like a flywheel. So the developers, really, that's the bread and butter of Roblox's success. And they have hundreds of thousands of developers. They talked a lot about, they really care for the developers. And one interesting statistic I saw about how they kind of encourage developers in the direction they want to drive the business, like they're trying to expand their demographics to be older than 13 years old, for example, a higher proportion, right? So one of the most interesting statistic I heard Dave, the CEO, Dave Baszucki, say in his earnings call was that 28% of the top 1,000 experiences now are 13 and over demographics, mostly, like people playing that. So 28%, that's 280 of the top 1,000 experiences are for mostly over 13-year-old people playing it. Versus a year ago, it was 10%. So a year ago, only 100 of the top 1,000 experiences were for 13 over. So a year ago, it was much highly concentrated on 6 to 12-year-olds. And it still is concentrated 6 to 12 years, but now they're successfully diversifying the demographic. I mean, that's one of the big things I think holding people back from Roblox is, can they expand their demographic beyond little kids, right? And so I think they're clearly doing that with this statistic showing that, and their developers are catering to that kind of direction that Roblox is trying to build. The developers know it's more successful for them if they can build the content for older audiences that have money to spend versus little kids that are just spending some allowance from kids, So I think that, we could be at the beginning of something really special here with Roblox.
Yeah, I think so too. I mean, they did mention too, this is the first quarter. I think this is the first quarter that they had more users over the age of 13 than under. So, kind of if you think about the funnel of customer acquisition, really what they do is that they're, getting kids at a younger age to, I mean, that's kind of the core. But then what you're seeing is they end up being sticky as they get older and they kind of age out. And a lot of them actually end up becoming developers themselves. I know your kids are kind of starting to dabble in that a little bit and learning some good life skills.
They are. I mean, I can imagine my kids, if Roblox continues to evolve and to be a big company, my kids are taking tutoring lessons with Roblox through this company called ID Tech. I signed them up for like once a week tutoring lessons they do online. They're really into it. They do it once a week each, and they're building their own little like worlds or games or hobbies or whatever you call it. And I've played it a couple. It's pretty cool, but they're getting kind of into it. And I could imagine, in 5 years, they'll be like 14 and 12 or whatever, those my two older kids, they could be getting like internships at Roblox or some company to help them build like Roblox related material or something. Like they could be making money on their Roblox skills. I think there could be a big demand for skills on Roblox development in the future. I mean, there's venture capital firms funding groups of developers to build Roblox experiences now, like that's going to grow that business, so it's just exciting. I mean, the stock as we talk is up 33% or 34% to $103, basically. It's pretty crazy.
New all-time highs today.
New all-time highs. Does it mean there's a breakout and then we enter new territory in the 100s going forward, or are we going to bounce back down to like in this 90s or 80s? I don't know. But on a day when the market's down, the growth stocks are all down substantially. It feels like, ARK's down 2.5%, their flagship fund, so that's like the benchmark for growth stocks, I would say. And so, when growth stocks are all down substantially, but Roblox is up 35%, that's a pretty strong signal for Roblox. I mean, this could be, and the volume, we were talking about the volume just as we got on, we were like, the first thing we said was like, wow, look at the volume for Roblox, 60 million shares traded already today on a 7 million average per day traded. It's crazy.
Are you surprised at all by the magnitude of this movement?
Yes, I am very surprised by magnitude. Part of me is like, maybe this is a good time to, close out of some of our position. It seems like it's run up too fast, but I think it's been kind of artificially depressed on these like expectations of Roblox being a COVID play, similar to Peloton. I think, we're medium, long-term speculators on Roblox. We're not short-term. If we were short-term, this would be the perfect time to get out. But I think we both believe it's going to be, there's a good chance that Roblox becomes hundreds of billions of of market cap. Like right now, we talk about market cap being such an important thing to frame in every discussion of a stock. Roblox is a 60 billion market cap company right now. Yesterday it was like 45 billion. Today it's 60 billion. Like it's going up, to 60 billion market cap, sure, but we think it could be 100 to 200 billion market cap, pretty soon, just based on total addressable market of the metaverse and all that. We talked about in that podcast. I think Bloomberg put out a big report saying 800 billion is the addressable market by 2024 for some of the parts of the metaverse that Roblox is involved in. So however much of that Roblox is getting in revenue, that's the addressable market based on Bloomberg. What I feel is Bloomberg's conservative report they put out. So it's exciting. I'm talking fast, but I'm excited about Roblox.
Yeah, well, I think we're probably excited to have some good news on a day when Tesla's now down $135.
Oh, yeah. Let's move to the down
continue
stuff. Yeah.
moving. Yeah, let's change our tune a little bit.
Yeah. Sorry. I know a lot of our followers are heavy Tesla. We are heavy Tesla, over half, 60 to 80% of my net worth is in Tesla. So this is a tough day. Yeah.
Yeah. I mean, the good news from Roblox is certainly only kind of tempering the bad news on Tesla here.
Yeah.
So, I think when we spoke last week, we were kind of making talking about where we thought the week would end up. I think you had said 1,100. I had said 1,075, if my memory is right. So we had been kind of expecting a drop or a consolidation level. Are you surprised that it happened today and by the magnitude of it? I mean, this is a big move.
Big move. This is in my head. What's going on in my head? Elon did the Twitter poll over the weekend. He's acting fast. He had his investment bankers sell half the shares in blocks yesterday and half the shares in blocks today. And that yesterday they took up most of the liquidity they could, but there wasn't enough to extend it today. So it's causing the price to go down even more dramatically to find enough block buyers for the other half of the, the other 5% of his shares he's selling to the street. He wants to get in my head, this is pure speculation on my part. Elon's getting this done quickly, and he doesn't care if it throws cold water on the stock. It's gone up quite a bit already, and he just wants to act on what he said he would act on. He made up his mind. He'll abide by the results of the Twitter poll. He said, that to me, that speaks action, like he's not going to delay, and so today hopefully is the last of the major bloodbath. I mean, there could be some lasting effects the next day or two of some more selling, but I think that the dramatic selling hopefully is mostly yesterday and today, possibly bleeds into tomorrow. But in my head, my pure speculation, Elon is closing out the last of his 10% sale of his Tesla stock today. And it's just all the investment banks, sales trading desks are doing everything they can to find blocks of buyers for the shares. And it's leading to the price coming down so that their buyers can get they probably give their buyers we'll give you the VWAP for today, the volume weighted average price of Tesla for today for X million shares or 500,000 shares or whatever it is. And they're, this is where it's leading the Tesla stock to go. What do you think, Matt?
Yeah, I think so too. I mean, obviously it's been incredibly volatile and on an upward trajectory leading into this week. So it's not entirely surprising that you have a major, gap down. But it does seem that the most likely catalyst would have been Elon selling. There was some talk about, kind of unwinding some of the gamma squeeze, and that's certainly possible. I think that maybe could be accelerating some of the movement that we saw. But it seems likely to me that this is yesterday and today, probably some combination of Elon selling. And the more I've been thinking about it, I mean, I didn't really like to give the stock split conversation a whole lot of thought, really, because the fundamental kind of finance nerd in me says it shouldn't matter, but the fact is it does matter whether these things happen. So I think doing this ahead of a announced stock split, I think is seeming increasingly probable in my mind. Now, whether that happens this week or next, or sometime later this quarter, I don't know. But it wouldn't surprise me if in the next week or two you get an 8K saying Elon sold his shares, and like a day later there's a announcement of a stock split.
I agree,
and I think that could erase all this pain. I hesitate to even call it pain because like we're still up way more than we thought we'd be relative
Yeah.
to like a month ago. So let's not
Yeah,
get too down on ourselves. I mean, the
I
stock's still
know.
doing phenomenal.
Still doing
But no,
phenomenal. Above
I
1,000.
do think this is fleeting, and I wouldn't be surprised at all if this was. It just makes sense to me. Elon kind of
Yeah.
needed the money anyways to exercise or to pay the taxes on his options.
Yeah.
He's going to exercise the other ones, I think, next year. So
Yeah. He
yeah,
gets a
I
more
think this is
favorable
a short term.
he gets a more favorable tax treatment this calendar year versus next calendar year if he's selling his long-term shares and such, right? So
Yeah.
I agree. I think that's what's going on, and I do agree for optics reasons. He knows how important it is to do this before a stock split, if there is to be a stock split announced, right? How bad,
Yeah.
the Dana Hull and the Bloomberg analysts that report so negatively on Elon, they would all probably, she doesn't always, but she does tend to report very negatively on him a lot of times.
Hmm.
But they would certainly frame it in a way that Elon pumps the stock with stock split, then sells the shares. It would be like
Hmm.
it would be outrage. It would create
Oh yeah.
outrage. So he knows that he needs to reverse the optics, and he doesn't. He doesn't. He wants to do what's noble. And the noble thing is just to take the hit now in the stock price, selling his shares, and then the stock split could be announced after, if there is to be a stock split announced. And like we said, we hope the stock split increases sentiment and makes the price go up, but it's entirely possible the market does what we don't expect, and there's a stock split and the stock goes down even further. Like, that's possible too. That's not impossible, right? I mean, there's probably
Yeah.
been cases of that in the history. Tesla is an anomaly in many ways, so it would not surprise me if that happens too. So it's just you just don't
Yeah.
know so much so fast. Momentum is changed.
Yeah. And to me, it kind of there seems to be a theme emerging with Elon where he's trying to mitigate the attack vectors, as he's called them, that from which people criticize him. So I think on the Joe Rogan podcast a while ago, he talked about his wealth was just sort of an attack vector for people to criticize him. And he'd rather talk about the issues and not talk about his wealth. And so I think the way that
Yeah.
he did this, if we're kind of interpreting this right, you say, okay, let's kind of democratize this decision. We'll put it out there. Let's talk about billionaires not paying enough taxes. Okay, well, how about I pay 15 billion in taxes or whatever the final number ends up being, and
Yeah.
we've kind of let the citizens, not that it's only a U.S. citizen kind of poll or anything, but let's just let public sentiment kind of guide this decision. I'll abide by it. I'm going to make sure I'm paying my taxes. So like, what's left to criticize about the way that he's handled this situation? I mean, you want to tax the billionaires? Okay, great. You just this billionaire just paid more taxes than I'm not aware of anyone paying a tax bill of this magnitude ever. Frankly, maybe there is some sort of precedent for it, but it's so hard to find legitimate avenues to criticize him after this. I mean, I think Bernie Sanders and one or two other folks did like, oh, you shouldn't be setting policy by Twitter poll. And in my mind, I'm like, okay, well then you do your job and like change the tax code. And otherwise, like what more do you want from this guy? He's like,
Yeah.
essentially volunteering to pay taxes.
Yeah.
So
I
I thought that
agree.
was kind of interesting. And then the
Yeah.
other thing it started getting me thinking about is like, he was really criticizing the UN for, the kind of lack of transparency and how they distribute aid to other countries. And here he is, kind of pulling out a very public poll saying he'll follow through, based on that. And I mean, it's almost like he's kind of creating a model for direct democracy, where you just let's put everything on the chain. Let's make the kind of decision-making optics. I mean, it's obviously not on like a real blockchain. It's just a Twitter poll. But you could see this as kind of like a prototype for some sort of future governance mechanism where, it is more like a direct democracy and you're letting individuals vote on individual topics instead of electing politicians who have, as we've seen lately, a pretty gross tendency to get corrupt and to make more noise than actually
all
do the
they
work
care
and set policies.
the politician's top priority is to get reelected. Everything else is a distant second place, so it's unfortunate. That's what a politician's top incentive is. And I think you're right. Yeah, this is setting a new precedent of transparency, and requesting the transaction ledgers of the UN request, doing the Twitter poll. He's referenced also sunset laws numerous times in the past interviews, which is like laws and regulations that expire after a certain amount of time. So he's got ideas of politics and such that I think are kind of coming about here, and maybe it's the seeds of a future Mars political system or something. It's but whatever Elon's doing here, I'm in favor of his transparency for sure. There's a lot here. I mean, the stock right now as we speak is at, oh my gosh, 143. It's slightly rebounded from its low of 1,023. It's at 1,043. Now, what do you think, Matt? I mean, short term, we mostly don't speculate short term on stuff, like publicly, especially. But you and I talk every day about short term opportunities. Let's just kind of open it up here. This is just our own pure speculations, not investment advice. I mean, if we weren't so heavily invested in Tesla already, I'd say this could be a great little buying opportunity just to sell some puts, because the puts are probably super expensive, or to buy some short-term calls. Those are probably super expensive, or just to buy the stock. I mean, what are we going to go down to? $900 a share, worst case, in my opinion. Like in the short term, it's possible, but I think, maybe we've come down $200, in a few days. It's, if you're waiting to get into Tesla, this seems like a pretty nice little opportunity.
Yeah, I mean, look at today's trading range, 1,023 all the way up to 1,174. So like,
insane.
Okay, it's fair to say, oh, the sky's falling when the stock's down 10%. But with how quickly this happened, and we know, we think we know what the catalyst is. If Elon is in fact selling, that's a huge amount of downward pressure. So I think this would be
seems like a great deal,
reasonable enough time to kind of speculatively dabble in some stuff like this. I mean, I'm sure implied volatility on options is through the roof right now. But if it wasn't, there may be some sort of play to say, all right, well, if a stock split is announced and maybe it goes up like 20% from here, maybe there's a nice return opportunity for there. That's probably a little bit too speculative right now without actually looking at options prices. But I do think, generally speaking, this might be a nice kind of local low. And maybe we'll this video will haunt us in the future. But the fundamentals are improving, sentiments changing, analyst revisions on price targets, and overweight ratings are kind of coming fast and furious. And I think 2022 is just going to be a crazy year with all the Berlin and Austin coming online, and full self-driving, I think, is going to do more for margins than people really realize. So I'm excited.
The $1,000 put options for Tesla are for this week, or for November 19th. Sorry, so it's a week and a half out. So November 19th, $1,000 put options are $45. So you could essentially buy Tesla today in a way for like $955 if you think about it that way. By selling those puts, or the call options for November 19th. For 1,200, like I said, is $10 approximately. So I mean, the stock would have to go back to 1,200 plus, which is also entirely possible. I mean, I can only imagine the volume going on. I mean, we're gonna have to watch that Spot Gamma latest video. I'm sure there's tremendous options volume with Tesla going on right now. I'm just looking at my interactive broker screen with the volume fluctuating and the trades. It's just crazy. It's like rapid fire. It's insane. But there's a lot of opportunity. Like, basically, we're so heavily invested in Tesla right now, we can't really afford to put more in. But if we were waiting to get more into Tesla, this would be the perfect time, in my opinion, to get in. I don't know. That's just my opinion.
Yeah, I'm just looking at that Spot Gamma Twitter thread right now, and he put out a tweet about an hour ago saying the negative deltas are being added right now. So it seems like he's essentially saying it's not a great signal for a quick rebound. So it's very hard to say what's going on right now. I mean, this is incredibly volatile, and you can maybe you'll be right. I'm almost certain you'll be right over the long term, but maybe the short term play doesn't work out. I mean, it's very easy to have long term conviction in Tesla, I think, but it's I've been on both sides of the short term kind of bets. So I would encourage anyone listening trying to make a play around this, be prepared to lose it all, and if you're not comfortable with that, then maybe don't play.
Yeah, yeah. Now, what I think, back to kind of just like before we go into question and answers, the biggest kind of medium term bullish sign I see, other than like short term, the stock split potential announcement, which may or may not happen. Even if it does happen, it's not a guarantee the stock goes up or anything. But the medium term bullish thing is the China numbers released yesterday, right? I
Yeah.
mean, Rob Maurer did an excellent. If people don't listen to Rob Maurer's Tesla Daily podcast, it's an absolute must subscribe and listen to it. Gives very good information, but sometimes he's a little bullish, drinks a lot of Kool-Aid like all of us. But if his based on his podcast, the numbers he goes over, if it's a big if the Chinese factory was indeed shut down for 7 days, like he's speculating, like the Twitterverse is speculated in October, right? And if that 7 day shutdown results in a direct proportional number of less cars being produced and delivered for October, that's another big if. Like just because it shut down
Hmm.
for 7 days doesn't necessarily mean that represents a proportional 1/4 less cars that produced for October. It doesn't necessarily mean that, in my opinion. But if those two things are true, and they announced that based on the numbers they produced yesterday, there's a huge beat for potentially like 300,000 cars delivered in Q4 of this year. Those are two big ifs. But if that happens, if we start getting rumors of that or catching wind of that come a month from now, like when the Chinese numbers for November are announced, and then we'll have another
Hmm.
data point to really see. But that would be monstrous. Like, what do you think, Matt?
Yeah, I agree. I mean, I think that caught a lot of people off guard, which is probably why you saw some of the strength early today around the open. I
Yeah.
know Troy Teslake revised his numbers, I think, after seeing that
Yes.
this morning. So yeah, if anyone doesn't support him on Patreon, do that. He's got great insights.
Yeah.
So I won't share publicly what he put out there, but it definitely seems like a very bullish kind of surprise. And if you're looking at the fundamentals of the company, that's a much bigger deal than all this stock split. Elon
Yeah.
selling shares, kind of short-term noise, which is
Yeah.
exciting and
Yeah.
can be
Imagine
make
their gross
the stock go
margins,
lower.
right? Imagine what their gross margins will be with their operating leverage. If they deliver 300,000 cars, and the Chinese cars, they've had the historic exports in October versus other quarters.
Mhm.
If they're exporting even more cars, which they've said is their most profitable car, they've said that's their most profitable car is
Yeah.
exports from China. So they're delivering
Yep.
more exports out of China. They're delivering, and probably their second most profitable car is just the cars built in China, sold in China. Because China is like a
Mhm.
manufacturing efficiency king compared to Fremont,
Yep.
California, which is like the Bay Area, most expensive place to live. But if they can ramp up the production to that level with their operating leverage, I mean, gross margins could be off the hook. Could be like 35%, 33%. I don't know, instead of 30%. Like, it's just insane. Like, I feel like the analysts, the upgrades will come in. There's been a flurry of upgrades the last few days, the last week or two, right? And there
Yeah.
could be just a continuous flurry going forward after the next quarter. If this is
Yeah.
true that they're going to deliver like 300,000 cars or even 280,000 cars would be huge.
Yeah. It was kind of funny. I mean, all these upgrades coming in are basically just kind of getting to the level of profitability that, folks like you and I would have been expecting anyways for
Yeah.
2022. So it's
Yeah.
like they're just kind of catching up with reality. And now we've got these first hints that Tesla may be even better than us bulls thought, in terms of
Yeah.
margins and output out of Shanghai. So yeah, it's really encouraging. Obviously a big if, but I'm not super concerned necessarily that we're going to drop down to $800 for sustained periods of time, like we saw happening for the majority of this year. It does seem like
Yeah.
we've kind of reached a new sense that okay, Tesla should be a $1 trillion company. This isn't just like a kind of fluke valuation. But then
I
the question
agree.
is, where does it go from here, and how quickly?
Yeah, and if they do that delivery, like maybe they're sandbagging the a lot of things. Like maybe there will be some initial deliveries. There's a lot of upside call option potential for medium near term catalysts. With like, what if they start delivering from Austin and Berlin? Berlin will probably be after Austin. But what if they start delivering from Austin next month or later this month, the first few Model Ys and such? And then what if they actually deliver the 100 semi trucks to Pepsi, like was sort of leaked maybe yesterday in CNBC interview? Like those are all
Yeah,
really
that was
cool, like
interesting.
positive signs. Yeah, it was interesting. So Yeah, there's a lot of really good potential upside surprises for the news cycle with Tesla. I mean, Tesla is a 1 trillion market cap company. Any one of these things by themselves do not necessarily point to a company that should be worth 2 trillion versus 1 trillion. But when you combine them all together, if they start happening, then I think the market consensus is like, well, Tesla should be well north of $1 trillion. At some point, it would start appreciating, I would think, in such a way. So exciting. We've talked about Lemonade a lot, Roblox a lot, and now Tesla a lot. That we're going to open up to Q&A for the next half hour and see what everyone wants to talk about, I guess. But again, this is being recorded on our YouTube channel, Good Soil Investment YouTube channel. So you can watch it anytime there. So let's open up to Q&A. People in the YouTube chat and Twitter chat threads. Alec behind the scenes will queue up some questions for Matt and I to kind of read and go over. Question from Crison. Do you have any concerns with the fact that Rocket Lab currently has a very small float and that many shares will unlock in the next few months? Thank you. I mean, I think a lot of shares already did unlock from their PIPE investors last month or month and a half ago, and that sort of led to a decrease in price. That's my belief. I'm sure there's more lockups probably for insiders and such. But Rocket Lab, that's a stock we didn't talk about today. That's a big part of our portfolio, and we've talked about it in the past. We actually have a really interesting roundtable discussion later this week. On our YouTube channel, again, we're going to have a couple of really cool formalized interviews recorded and released in the next few weeks. One with some satellite builder, previous satellite builder and rocket scientist type person, and someone who does a well-known YouTube channel on SpaceX and Rocket Lab stuff. So we're going to have a roundtable discussion with them later this week to talk about stuff like this. And we'll connect the dots ourselves with the lockup periods of Rocket Lab stock. I think the valuation for Rocket Lab at 6.6 billion is, I think there's a lot of room to run. Like, that's what we talked about many times. Frame your discussion about a stock in terms of market cap first, as you talk about it. 6.6 billion versus SpaceX's, 100 billion plus valuation. To me, it just seems like there's a lot of opportunity for Rocket Lab, in a big picture. And we've drilled into it a number of times, but we'll drill into it more in that roundtable discussion. Matt, what do you think?
Yeah, I agree. I mean, in terms of the lockup in particular, that could create a little bit of downward pressure. But honestly, what we saw with the SPAC merger was the redemption rate was incredibly low. I forget what it was, but it was something like 3% or less.
Yeah.
So there doesn't seem to be a lot of insiders that were actually interested in kind of selling to liquidate. So maybe that changes over time, but in my mind, that's a very small kind of risk relative to the opportunity in the kind of burgeoning space industry. This space to me kind of seems like the EV space felt 2-3 years ago, where nobody really recognized EVs as kind of the future. So like Tesla got a quote unquote premium valuation, but it wasn't nearly premium enough to reflect the fact that EVs are going to be essentially 100% of sales and ICE vehicles will be zero. I think there's kind of a similar situation at play right here in the space industry. At least it kind of feels that way to me, where like they've got seemingly high valuations relative to their financials, but even those valuations don't really reflect the growth that this industry is going to see over the next decade. So I'm just excited to kind of be in this space, because I think all boats will rise, but I think it's going to be very clear that Rocket Lab is kind of the clear number two, and so they'll rise probably disproportionately more than a lot of the other companies out there, like Virgin Galactic or some of the others.
Yeah, and just so people know already, we have some articles, research we put out on Rocket Lab on our website, goodsoilinvestment.com, and the research center. We try to open source kind of our formalized research. So we have something on Rocket Lab there with a price target and such, and then we also have something on Roblox there that we put up, several months ago. Anyway, next question from John Christ. Could Roblox be bigger than YouTube? Could Roblox be like a real life teaching metaverse where tutorials are built to show you how to do stuff, like a practice session, and apply it to real life? That's very like futuristic thinking. I like that. It's always good to ask, just think of new questions like this. This is what I'm always doing, is just asking questions, like sometimes there's no good answer, but it just the action, the thought process or thought exercise of asking these questions helps link things together as time goes on. what's interesting is Dave Baszucki mentioned that next week in their investor day, they're going to have a big investor day for Roblox where they go over a lot of stuff. They're going to announce a bunch of partnerships with very well-known educational system firms, companies, or organizations. And so I think education is a big part of their future, and they believe it to be so too. And I think they'll announce a lot more about those plans next week in their investor day. How profitable, penny for penny that is for their business, it's hard to say. We talked a little bit about that with Matt Canterbaum. I keep saying his last name wrong, but in our interview with Matt from Bloomberg, we talked about it actually, and he wasn't, he thinks it's good, but he wasn't so sure it was going to be like a very profitable business model for them versus like the experiences of the concerts and such. But the teaching metaverse or tutorials are built to show you how to do stuff instead of YouTube. It's very possible. Roblox is sort of, it's not like video like me and you talking right now on our YouTube live channel, though. It's all animated stuff, but maybe the animated world could be used to help show real life teachings of things, or maybe they can pivot to show more somehow augmented reality video in their Roblox, metaverse or whatnot. I don't know, Matt, you have any thought on that?
Yeah, I think anyone who hasn't seen it, I'd highly recommend listening to that or watching that video that we did. But yeah, I think there's going to be, my takeaway is I don't know exactly how this is going to pan out. Maybe there will be something like this, but it seems likely that there will be some sort of use case that we can't even imagine right now that will be really popular, 5-10 years from now. And it'll be like, in retrospect, it'll be like, oh, of course, we should have known that smartphones were coming, and now it just seems so obvious. But at the time, like when you're going through that transition, and especially like a year or two before that transition becomes mainstream, it's really hard to kind of see around that corner. So the thing I like about Roblox is it's the platform that can morph into whatever the metaverse or Web 3.0, whatever it is, ultimately morphs into. And they'll have some sort of what they showed this quarter is that they're going to have a huge share of eyeballs going forward, and that's going to be the most important
engagement
thing,
hours,
directing value.
Yeah,
engagement hours.
Yeah. All these young kids growing up fast are, they're so into Roblox. Roblox is, if they can maintain and keep that user interested as they age, that'll be critical to their success. All right, next question. Let's see. From ES 1911 somewhere, Rivian IPO. When? Starlink IPO. Well, yeah, we were supposed to talk about Rivian and Lucid a little bit, but we just had the big
too much
Lemonade
content
Roblox.
this week.
Yeah, we didn't expect a big announcement from Lemonade on MetroMile and Roblox earnings blowout like that, so we wanted to focus more on that. The Rivian IPO, they just announced. I think this morning they're upping their valuation on the IPO to 65 billion market cap. I think it was previously like 50 to 60 billion. Now they say it's going to IPO, I think later this week for like 65 billion. They have 48,000 pickup trucks orders reserved, and I think when I looked at their filings, or I saw someone reviewing their filings in a video, it said something about they plan to have all those delivered by the end of 2023, I want to say. So like 2 years from now, they'll have it all delivered. Like, so not even the end of next year. Like they're kind of setting expectations low, it sounds like, or they're just revising their expectations that it's going to be a slower ramp up. So that seems crazy to that's like 50,000 Rivians at 100,000 a piece average. It's like 5 billion of revenue. So it's going to take them 2 years to get 5 billion of revenue, and they're being valued at 65 billion IPO. Like, that's nuts to me. Like, I don't know. That's like their main source of revenue. I'm sure they're going to deliver 100,000 vans to Amazon, but what's that? Like another, they're not going to sell those delivery vans to Amazon for 100,000 a piece. They'll be probably at cost, basically, since Amazon's like an investor, So it's insane. Like, their IPO just screams like, oh my gosh, short, but like we've talked about before, there'll be book runner, the underwriters of the IPO and such. They have mechanisms in place to keep the stock from not going below the IPO price for a certain period of time and such. So what do you think, Matt?
Yeah, I mean, it seems frothy right now for sure, but at the same time, look at Lucid. It's at $70 billion market cap right now, which seems probably even more crazy to me.
Yeah, that's even more crazy.
The whole space, I think, is a little bit frothy right now. There's there's going to be some winners out of this batch of EV startups, but I would imagine there's going to be a lot more losers. Companies that will ultimately go bankrupt. So I think it's a risky time. I wouldn't want to put my money on Rivian. Maybe once it
No.
settles out in a month or two, you maybe play a short on it or something. But I think if you try to get in right at the outset, it wouldn't surprise me at all if it like shoots up to like $120 billion valuation and then plummets down to like 40 or something. Like it's going to be volatile, I think.
It's going to be crazy after the initial IPO. There's really usually on these IPOs, there's usually just upside surprise temporary in the short term. Except that, since the Facebook IPO years ago, that was a big debacle where right after the IPO, the stock kind of tanked. But most of the time with these IPOs, there's these, advanced kind of like capital markets, built-in mechanisms with, supporting the share price at a certain IPO price for their institutional investors and so forth to not keep the price from going down below a certain price. So Rivian's a huge IPO. Shorting the stock just doesn't seem wise to me. Also, shorting Lucid seems very, tough because the Saudis control like 60 to 80% is what I've heard, somewhere around that range. So even though it's publicly traded, Lucid, it's only a small percentage of their firm is publicly traded. The vast majority is owned by the Saudis. And so for that reason, Lucid is very tricky to time when to short as well. As outrageous as those valuations are, and as we all know, the long term, those companies are long term likely to be dead or acquired for a much less valuation than they are now. It's hard to short them and make money.
Yeah.
And the Starlink IPO, there's rumors. I think Gally from Hyperchange put out a video about he's got sources saying that there's going to be an IPO in 2022. That doesn't surprise me. I mean, we thought it was going to be 2022 or 2023. I think that's basically general consensus. We knew it would IPO somewhere in the next 2 years. So seeking, I think like a 50 to 100, I can't remember the reference, but it said like 60 to 80 billion market cap valuation or something is what I thought I heard him say in the video. So yeah, that's exciting news. The Starlink IPO, that's a potential generational company right there. So yeah, we'll see how that news develops. Question: could Tesla do the same thing as Lemonade to expand their insurance business to more states? That's a good question. I mean, perhaps Tesla was looking at MetroMile too or something. I don't know. I mean, it's possible. I think Tesla likes to do things in-house and they have time on their side. Like they don't have a deep sense of urgency to get the insurance up and running as soon as possible because it's just like a side bet on their entire business. Sure, they want to keep it a priority along with everything else, but it's not their top priority. Whereas Lemonade's top priority is like rolling out their car insurance, so it made more sense maybe for Lemonade to do something like that. Whereas Tesla can kind of, build it from the ground up themselves, which I'm sure they prefer just to vertically integrate. So I don't know. What do you think, Matt?
Yeah, I mean, with Tesla, I think the synergies wouldn't be as extreme. Like, they've already got the telematics data, for example. So whatever they would end up getting from a company like MetroMile wouldn't be useful to them necessarily because it's not in the format of the data that they're getting off their vehicles. So, I think the only thing that they could be interested in acquiring maybe is those registrations. So that maybe is worth something, but maybe it's not worth, anything in the billions of dollars. So I don't know what other insurers would be out there that they could kind of acquire just for those licenses. But to me, it makes much more sense as a strategic play for a company like Lemonade that, they can kind of cross-sell the products too and can do that, as opposed to Tesla, where the only thing it's really doing is kind of speeding up the rollout, which I think, we talked about this a little bit, but they're going to have to do a lot of these sorts of registrations. Obviously, on the insurance side, they're in California and Texas, I believe, right now. They're going to be rolling out to other states soon. But like we saw just this week too, that Elon, I think it was just yesterday, registered some entity as an energy provider in ERCOT, which is the Texas grid operator. So they're going to be able to sell wholesale energy, buy and sell wholesale energy in Texas. And I think you're going to see a lot of these registrations on the energy side of the business as well, where they're just going to do this in each state where they operate, and honestly in each country too. So I think just based on Tesla's history, I think they're going to build this capability out in-house, kind of go through the through the pain internally, as opposed to just kind of buying, registrations. I think they buy technology, which you saw like with what's that company in Germany that they bought, that robotics company, and then obviously
Groman.
the cell company
Groman.
Groman, yeah.
Yeah.
Grumman. I was thinking Grumman, but that's Northrop Grumman.
Yeah.
Grumman, and then the battery company, the capacitor company that they saw. So I think they'll
Yeah.
stick to kind of acquiring best in class tech, but not like licenses and
Yeah.
registrations.
I see a comment from Eric Lin saying Lucid's market cap is almost double of Xiaopeng. Kind of crazy. Yeah, that is insane. Xpeng or Xpeng is half of the market cap of Lucid. That's insane. But
That is insane.
like we were just saying, like Lucid is a small, like it's floated, a small amount of it is floated to the public. The vast majority is held by the Saudis, so like they're controlling probably the market cap valuation more than the public markets. They can just infuse an extra 10% of capital of what they already have in there to bump up the valuation, X% based on liquidity. So, Lucid, that's crazy. But it's hard to touch and short it. If anything, we've talked about in the past, like long-term puts maybe one day with Lucid, if it starts appreciating and stabilizes where the puts aren't quite as expensive, the long-term puts could be, could be a nice thing, like at a $10 strike put or $20. Like I'm thinking back to what Tesla shorts used to do to Tesla. Like they used to buy like puts that were made for like they assumed Tesla was going to go bankrupt, so they buy like $10 puts for like 10 cents and think they're going to make a killing on it. But I think like Lucid, this could be the time you actually do that strategy, and it might work out in the long run. So anyway,
yeah, it's valued higher than NEO right now. I was just checking. That's like,
oh my gosh. Crazy. It's crazy. I mean, they delivered a few units to some of their existing, investors, and I can't wait till they deliver, 500 or 1,000 units, and you have like dozens of regular people like me and you who are bought in. Like I know one person who's kind of follows us who is a big believer in Lucid and has a reservation, and he's located in like Seattle or something, and he's gonna hopefully get an early delivery. I can't wait to ping him and what he feels about it, like his honest feedback. I mean, he'll be obviously probably biased a little bit because he's an investor in Lucid, but or he's an investor in the stock or whatever, I think. But still, I'm just can't wait to the reviews of customers of Lucid and Rivian. I heard a rumor about Rivian. I mean, don't quote me. I mean, I don't know if I told you, Matt, but I mentioned, I think on Dave's chat or something the other night, was that up where I brought my Model S Plaid to do like the drag races for the quarter mile a few months ago when I first got it, up in the Sonoma Raceway here in Northern California. Someone I met there who I stay in touch with, he goes there regularly with his Tesla, actually, and or I think he's a regular car he does drag races with as like a hobby. But he said last week or the week before there was a bunch of Rivian trucks up there, and people testing the Rivians, and they were breaking down left and right. And he even saw one like broken down on the side of the highway or something near there or something. So that's not good news. And there was like the Rivian fire. Remember, didn't Rivian crash and catch fire, or it just crashed or something like a few months ago? There just seems to be some weird pink flags that just don't seem very good for Rivian.
Yeah, a lot of it's anecdotal, but certainly at this valuation, and with how long they've taken to develop this product, you'd kind of think that it'd be like of the highest quality. And I'm not saying, I know you're not saying that it isn't, but there are some signs that there could be some issues which could be quite major if true.
Yeah. Yeah. Someone said if Lucid gets into trouble, I think Apple would buy them. That's one thing I think could have happened if Lucid was back to like a 10 or 20 billion valuation. Apple is too cheap. Tim Cook is too cheap. I know his hand is being forced. They're trying to do it themselves with Project Titan. I don't see them buying Rivian for 50 billion or even 25 billion. It would have to be like pennies on the dollar, in my opinion. They're very, it seems like, cheap on that stuff. So anyway, let's go to the next question here. From Jay-Z, question: do you invest in the crypto markets too? Our fund is not allowed to invest in cryptocurrency itself. We have talked about this strategy we run around MicroStrategy, the stock, which is like a proxy to crypto, to Bitcoin. And then so we do some stuff around options with MicroStrategy, which are derivatives on the derivative of crypto in a way. So we've done some interesting stuff with that. We've talked about publicly. But as far as crypto itself, our fund does not engage in it directly. Personally, Matt and I think we hold both some Bitcoin and Ethereum, I think, right? And Dogecoin maybe, or something a little bit. Is that right?
Yeah,
So
I was I was out of Doge for a long time, but I got back in maybe a
yeah,
month ago or so. So just a small
yeah,
amount, but yeah,
yeah,
I'm more bullish on Ethereum. I held a little of Bitcoin as well, but
yeah,
yeah,
yeah. I
it's
don't know
lower
if I've
conviction, I think, than the rest of our stuff.
Yeah, I don't know how many. I've actually been invested. I've had the same amount of Bitcoin. I bought it in 2011 and lost half of it in the Mount Gox crash 2013. But luckily, took half of it in cold storage and still hold it. But yeah, my cost basis was like $28 a Bitcoin, and I've held it all this time. And it's pretty crazy. Basically, as soon as I'm scared to take it off the USB stick and put it onto a connected computer just because I'm not a tech person. I feel like there's probably like spyware in my computer ready to like steal it as soon as I put like one of those old wallets in there or something. But one day I'll have to put it into Coinbase or something probably. All
Yeah.
right.
Put it on an old laptop with no internet connection.
Yeah, yeah, yeah. I mean, it was just a little bit of Bitcoin way back then. I didn't have a lot of money. It was like $1,000 was a lot of money to me back then. So it was like it wasn't much, but it's turned into a substantial amount now, obviously. So from Chan Taylor, question: how can we get involved with Good Soil? Oh, good question. So yeah, we have a website. I used to say I used to work for Interactive Brokers
Brokers.
for 13 years. It's like programmed in my head. Interactivebrokers.com. Go there. No, goodsoilinvestment.com. And on there's a get in touch button. You can click that and put your information in there. And we hope to announce, one day in the future, we'd like to do like an ETF or something where everyone can invest if they want. It's not as exciting as the fund because the fund is allowed to do like options and more complex stuff than a ETF can do. But the fund itself is really it's only for really high net worth investors for regulatory reasons at this time. We just don't have the bandwidth yet to build something more on a massive scale for everyone. We have to become a registered investment advisor, and we could do managed accounts and or an ETF, but just the bandwidth to build that stuff out would be enormous. We're just not quite there yet. We're doing so much. I mean, our Good Soil Investment Management, YouTube channel and our hedge fund is taking up a ton of time. And so at some point we'd like to do something more, but not yet in terms of allowing for investment options. All right, next question. From Cash Game Replays, any thoughts on Astra Space as a competitor to Rocket Lab? Yeah, I mean, Astra, I think they're trying to go to lower Earth orbit. They failed like 5 or 6 times in a row now. They're still trying. They're being persistent. We'll see if they get into lower Earth orbit. I mean, Rocket Lab's gone into, launched to lower Earth orbit 20 plus times, I think now, and they're about to do another one in the next few days. So, maybe once Astra is able to successfully launch something into lower Earth orbit, then I'll take a closer look at them. Until then, I think they're just potentially one of the many startups trying to get to lower Earth orbit fail. So, that's my thought. I think they filed something recently to try to do like there are a bunch of people filing things to do something similar to SpaceX with Starlink. And it's funny that all these startup space companies are doing it, in my opinion, as like a marketing ploy to try to boost their valuation, just to get approval from the FCC to get the ability to send, satellite constellations up to lower Earth orbit, even though they can't actually launch anything themselves to lower Earth orbit yet. So it's just crazy. And Rocket Lab, funny enough, didn't apply to the FCC to do that yet, and they actually have the capability to do so along with SpaceX.
Yeah.
You want to take the next question, Matt?
Sure. From looks like a run-on name there, but Ramez Zenti or something like that. Do you think Elon will spend much time on SpaceX? I'm not sure what that means. Do you think Elon will spend much more time on SpaceX, considering everything he does is needed for a Mars colony, e.g., solar, batteries, Tesla bot, even Kimball doing indoor farming? Yeah, I think we talked about this a little bit in the past. I do think probably in the next 5 years, maybe in the next 5 to 10 years, Elon will kind of back out of a more active role with Tesla and probably spend a lot more time on the Mars colony. I mean, it seems pretty clear that's his end goal. A lot of his projects, like this question alluded to, are kind of can work on Earth, but then will have huge application on Mars as well. So I do think thinking about him, he's 50 years old now. 10 years from now, he'll be 60. I would imagine he'd want to be kind of boots on the ground on Mars at that time. or at least sometime around there, to kind of get that colony up and running and give it as good of a chance as possible of becoming self-sustaining. So yeah, my sense is that that's probably what he's going to be doing. What do you think, Emmett?
Yeah, I agree 100%. I mean, he's laying the ground for the Mars self-sustaining civilization. You know, the Tesla bot, I believe, is going to be a huge part of that. I think uh, they'll. That's what I'm most excited about for Tesla's future. Actually, is a Tesla bot. Like right now, people hardly talk about it or think about it, even though it was revealed at AI Day, and he said that they'll have a prototype in a year, which in Elon time, even if it means 2 years, but let's say a year from now they reveal a prototype of the Tesla bot. That's going to be super exciting to me because from that point forward, people, I think people look out like 1 or 2 years on us. They can envision more easily, like, hey, what's going to happen the next quarter, next few quarters? That's easy. But then the next year or two, people like to kind of imagine like how positive could it be, with Tesla Giga Austin and Giga Berlin fully ramped, and you can kind of imagine that. But to imagine beyond that, like in 2 years from now, what do you think we're going to be imagining from that point forward? Right? Like in 2 years from now, they'll probably have announced another factory, maybe in India, let's say, another one in Europe, in the UK, another one in the US. Who knows? Maybe they'll announce 2 or 3 more gigafactories by then. So in 2 years from now, we'll be imagining even more cool stuff for Tesla. But I also think in 2 years from now, we'll be imagining how transformational the Tesla bot will be, because they'll have revealed the prototype by that time, and this prototype, this Tesla AI bot is not some joke. Like Elon's not going to announce something like that as a joke, like this is serious. Like he brought it out early to try to recruit AI talent, because he wants to get the AI talent in-house as soon as possible. But the AI bot prototype, that's under development, like they're going to have that in a year or two. And once they show that, then the imaginations of all of us are going to go wild with what the AI bot is going to be able to do, 2 or 5 years from then, when they're mass produced and deployed to everyone who wants it, So I'm super excited about that. And I think that'll be a big part of the Mars colony. Sorry for the tangent on that.
No, it's interesting. And I think, it's very easy to just push that off or not even contemplate it in the valuation. But, I think the rate of improvement we've seen on FSD has been, it maybe appears linear, but once you get Dojo in there, it's going to be super fast. And by the time the bot comes out, Dojo will, be much bigger. So I think the feedback loop on improving the functionality there is going to be much faster than we're accustomed to seeing. So I think rate of improvement is going to be something that's just going to blow minds.
Absolutely.
All right. You want to do one or two more questions?
Yeah, let's do 1 or 2 more. Let's see.
All right. So Musings by Marco says, how do you think underweight portfolio managers will react to this extra Tesla drop? Will they start buying through end of year, or did they sell today? What are your thoughts on that?
Yeah, I mean, I think the underweight portfolio managers were under a lot of pressure. I think, basically, some of them are stubborn, like they're just firmly in the bear camp, maybe some cognitive dissonances in them where they're just not going to believe in Tesla, and they're ultimately going to, maybe some of them will lose their jobs because they underperformed so much for not being in Tesla the whole time, and that's fine. That's Darwinism, capitalist Darwinism at its finest. The people that refuse to believe Tesla, let them lose money, lose their job if they're in the financial world. If you're in the investing profession and you can't understand Tesla and you've been so wrong on it, then that's the wrong profession for you, in my opinion. Like it's the biggest story of our lifetime in terms of investing, in my opinion. So, the underweight portfolio managers, some of them may refuse to get into it and stay underweight, but so I don't know. Some of them may be swayed to start buying Tesla. Yeah, it's hard to say. But I think the news coming, if the China deliveries are gonna be so impressive in November, I think that could spur kind of like a bunch of buying with portfolio managers that are underweight. Start another bull run on the stock potentially. We'll see, I guess. What do you think, Matt?
Yeah, I mean, if you're underweight, then you don't necessarily mind this drop because you're going to overperform relative to your benchmark index, at least all of the things equal. So you might be feeling smart on a day like today and think that, you were right to be underweight. So I don't think necessarily big movements like this will cause anyone to buy necessarily. I think there's probably more buying pressure on the way up. I mean, because if you're a fund manager or portfolio manager and you're underweight the best performer on the index, then that really hurts your compensation, and you have negative alpha then. So I think if there's a quick rebound, then you can get some buying pressure from underweight institutions. Maybe some of them will say, okay, I'll take this discount now to buy a little bit, but I don't think it'll be a big driver, honestly.
Yeah, I think so too. All right, let's do the last. Let's take one more question, Alec, if you don't mind. Let's see, Alec will queue it up. This is to Matt. Other than Tesla, any other solar roof plays that will disrupt legacy utilities worth taking a look at? What do you think, Matt?
I don't think anyone's trying this. I know Dow had a solar roof shingle thing that they tried to make work maybe 10 years ago, something like that. And it basically failed. It's a really hard challenge, honestly. And the costs are going to be much higher than either a normal solar panel or a normal roof shingle. Like the customer acquisition cost is hard. Tesla has an advantage there. The engineering challenge. I mean, we saw how hard Tesla struggled with this, basically taking like 4 years to get to commercialization after announcement. So maybe there's others that are trying there, but I don't think there's going to be anyone that's kind of like a meaningful competitor to this. I think there'll be a lot of solar players. I mean, we already see them kind of installing traditional solar panels. I think there's going to be a limit to how many people want those on their roof, because there's I think a mindset that they're not as attractive as just a normal roof. So the solar roof kind of solves that problem, and I think that will lead to a larger addressable market. So no, I mean, I think there's disruption coming to the legacy utilities. I've spoken a little bit about that in the past. I think it's going to take a decade or more to really play out. So I think they're going to kind of go along hunky-dory thinking everything's all fine, and then one day they'll kind of realize that their load is gone. It's a little bit like we were talking about with insurance, where you lose your customer base, like to companies like Lemonade, and then you have to raise rates for your existing customers. When that happens on the energy side, you've got people like Emmet who are they're reducing demand because they're generating themselves. Well, the company still has to pay for all their generating plants, all their staff, all their overhead, all the transmission and distribution lines. And so if you're just dividing all those costs by a smaller amount of kilowatt hours that are ultimately delivered to customers, well, then in order to make those economics work, you have to raise rates, which makes solar look more attractive. So there's this concept called a utility death spiral, which is just exactly that. You got to raise rates. Solar costs are coming down, and so as adoption will start off small, and then eventually it will reach this inflection point where it's going to really feel painful to pay utility bills relative to solar, and I think that's going to cause this huge disruption, but it'll take some time to play out.
Yeah, that's a good answer, Matt. Yeah, so just so everyone knows, this is the first time I think we successfully were able to do what we feel is the holy grail of this kind of live stream by putting on Twitter Spaces at the same time as YouTube Live. It's recorded on the YouTube Live channel, so you can watch it anytime. It'll be posted there pretty much immediately after we end this. We talked about Lemonade significantly, Roblox significantly, and Tesla. One thing I wanted to point out about Lemonade that I really like, that aligns with us really well, is they're giving back. I think they give back like 10% of their revenues after costs or something like that to charity based on what their customers choose for charities. So we really like that giving back angle. That's why in our business model for our hedge fund, we have built into the offering memorandum that half of the fees, half of the 2 and 20 management and performance fees we collect, after fees, those go to charity as well. So that's sort of how we think about evolving capitalism for the future, and that's what keeps us going, not just to make money. And we love the investing world and trying to pick stocks and make money, but more importantly, what drives us is trying to evolve capitalism to be more of a giving back vehicle than just a way to, accumulate more wealth for yourself. So anyway, we'll leave it at that. And we have some good interviews coming up. We got that Rocket Lab kind of SpaceX roundtable discussion later this week. We got a discussion with a guy who I've followed for a long time on sports betting. and the philosophies around sports betting and how that some of that is similar to investing in stocks and such. He's a very philosophical guy. I think it'll be fun for people to listen to. We got an interview with a venture capitalist, a well-known kind of venture capitalist coach or something. You know, he's sort of like a coach for startup founders and works with a lot of venture capital firms and such. So his point of view on venture capital, we'll pick his brain on that and talk about Tesla with him too. So we got some good interviews lined up on our YouTube channel in the coming weeks, and we hope to have more in time. So hopefully we'll be able to keep this live stream going forward on both Twitter Spaces and YouTube Live. So we'll leave it at that, I guess, Matt, joining. Right? Yeah, thanks all for joining, and we'll see you next week. And hopefully Tesla is hit its lows of the day. We'll see. It looks like it's going low again. So we'll see. We'll see how low
Excitement
it goes.
continues.
Okay. Yep,
Thanks, everyone.
That's right. All right. Thanks, guys.